key factors behind India being the fastest growing top 10 economy are, first and foremost, it is a demographic dividend, and this is going to be favorable for the next 2 to 3 decades. Secondly, formalization has helped garner larger tax and hence larger revenue for the government. Our superior digital infrastructure along with Jan Dhan, Aadhaar and Mobile has helped with direct benefit transfer and which has reduced leakages significantly. So the subsidies have come down. Both these things have helped the government to do a major capex push. Now the capex has moved up from 3 trillion to 11.1 trillion from FY17 to interim budget FY25. The China Plus One and Make in India boost through PLI scheme is driving the manufacturing sector. Also, the rapidly expanding affluent consumers are continuing to drive the consumer spending. All these factors augur well for India, and India is going to be the fastest growing economy for next few years, and by 2030 we are going to be the third largest economy in the world. With a strong India growth momentum, in spite of the global slowdown, India is in a sweet spot in the global context. Recently, India's market cap has scaled the 4 trillion mark, and India has emerged as a key equity market. The retail participation in the equity market has also scaled up post-COVID. These retail flows, both direct equity investment as well as equity investments through domestic institutions, has been cushioning the market from volatile FPI flows. And clearly these investors have benefited from the outsized return generated by the market, especially post-pandemic. We have launched a series of NFOs over the last 15 months to cater to the unmet needs of our esteemed policyholders by filling the white spaces in our fund offering. These NFOs were well received and have generated outsized return, thus benefiting the policyholders in a short period since the launch of these funds. With the same thought process, we are launching the Rising India Fund, which would provide investors with an opportunity to benefit from participating in the growth stories across the Indian corporate landscape. The fund aims to maximize on returns by capturing the value creation opportunities in the new age sectors as well as the traditional sectors. Tata AIA Life policyholders can invest in these funds through the company's ULIP offering, including Fortune Pro, Wealth Pro, Fortune Maxima. They can also invest in the fund through innovative ILP solutions like Param Rakshak and Param Rakshak Elite and Param Rakshak Plus. Or they can also take benefit of this fund through recently launched Profit. This product offers multiple benefits across health, wealth and life cover, thus offering the consumers the unique opportunity to benefit from the long-term growth potential of the equity markets while also securing their loved ones. The Rising India Fund is the new fund offering by Tata AIA Life. The fund aims to invest in sectors which would benefit from the robust economic growth in India. Moreover, we are of the view that with the rise in the Indian economy, more rising stars would keep emerging across sectors in the investment landscape over the years. The Rising India Fund expects to create value to the investors by investing in a portfolio of such companies. The investment would be across sectors and across market cap, and in stocks that offer long-term growth potential at reasonable valuations. The fund is a must-have for those investors who have a high risk appetite. Investors who wish to tap into investment opportunities across market cap to ride the decadal India growth wave and benefit from the power of compounding to meet their long-term financial goals. In recent years, Tata AIA has introduced one of its kind solution, namely investment linked plans under the Param Rakshak series. These solutions enable consumers to avail market linked plans with high protection cover, thereby offering a dual benefit of financial security with wealth creation opportunities. Some of these solutions include Param Rakshak Pro, Param Rakshak Elite, etc., offering wide range of premium paying terms and payout terms. Consumers can also avail of options like systematic withdrawal in line with their cash flow needs. Recently, the company has also introduced Profit, which enables consumers to invest for future health related expenses while generating wealth through market linked investments. To add to this, we also have a health and wellness proposition with globally renowned Vitality platform available only through Tata AIA Life Solutions in India. This allows to adopt a healthy regime and also get discounts on the policy premium amount. Rising India Fund is an equity fund which aims to ride the India growth story. The fund will invest in sectors which will benefit from the decadal India growth story. The fund is market cap agnostic and will invest in opportunities across market caps, that is large, mid and small cap, where we find value creation opportunities. The fund would cater to a blended portfolio of new age companies as well as the traditional companies which benefit from the rising India story. We have seen that even with the global geopolitical turmoil, volatility in the international financial markets and volatile FPI flows, the Indian equity markets have been well cushioned by the domestic flows. The Indian economy continued to be the fastest growing large economy over the last 3 years. Going forward, the capex cycle is expected to pick up as the capacity utilization is at decadal peak. Corporate leverage is at historically low levels and banking system is well capitalized. Thus, equity markets would tend to do well over the medium term in spite of the expensive valuations. We at Tata AIA Life always believe in focusing on delivering superior, consistent and risk adjusted long term returns in line with the fund's investment objective. We follow a bottom up stock picking approach backed by well defined research process. This has helped us to deliver outstanding fund performance across our funds. As discussed earlier, we have delivered outstanding performance across all our funds. Now, Morningstar is an internationally recognized rating agency and they rate insurance funds in India. They rate top 10% funds as 5-star and balance 22.5% funds they rate 4-star. So against 32%, we have 95.25% of our funds rated 4 or 5-star on a 5-year basis as of 31st Jan 2024. Coming to fund performance of our recent NFOs, we launched a new fund in December 2022, the Emerging Opportunities Fund, after a gap of nearly 8 years. Since its inception, the fund has generated a stellar return of 56.92% as of Jan 31st, 2024, as compared to the benchmark return of 46.92% during the same period. Subsequently, we have launched new funds in the small cap, flexi cap, sustainability and hybrid spaces. These funds have added value to our esteemed policyholders in relatively short period of time since their launch.
We would like to update you on the tax benefits available under insurance plans at the time of maturity or withdrawal. Insurance plans give insurance benefits not only at the time of paying premiums under Section 80C, but also give you benefits at the time of maturity and withdrawal. Under Section 10, 10D, all unit-linked insurance plans with an aggregate annual premium of 2.5 lakhs and below, purchased on and after February 1st, 2021, will continue to enjoy tax benefits at the time of maturity and withdrawals if all the conditions as per income tax are met. All consumers who have purchased unit-linked plans prior to 1st February 2021 will continue to enjoy benefits of taxation at the time of maturity and withdrawal, irrespective of the premium amount invested, subject to all other income tax conditions being met. Under Section 10, 10D, all traditional policies with an aggregate annual premium of 5 lakhs and below, purchased on or after 1st April 2023, will continue to enjoy tax benefits at the time of maturity and withdrawal if all conditions as per income tax are met. All consumers who have purchased traditional policies prior to 1st April 2023 will continue to enjoy benefits of taxation at the time of maturity and withdrawals, irrespective of premium amounts invested, subject to all other conditions of the income tax being met.